Hey guys, Geno V here, talking about the things I like to talk about. Today, that means talking to you guys about the value of dollar cost averaging. DCAing, if you will, is the term that's thrown around online. So the premise is super simple, right? The idea here being you're allocating a certain amount, a certain dollar amount every interval, be it a day, a week, every paycheck, every month, into a given asset. It could be a REIT, it could be stocks, bonds, T-bills, index funds, it can be Bitcoin, it can be crypto, it can be whatever it is that you want to invest in. But the core concept of DCAing is daily allocation or monthly or whatever interval towards something automated, right? So it just automatically deducts from your bank account or your checking account or whatever, and it just sets it aside at that interval every time. Small amounts usually, right? Why is this useful? Well, the first reason that it's useful is that you can avoid the huge spikes and falls of the market, or at the very least, ride it out as best you can. Generally, you have a better return DCAing over an extended period of time than you would if you tried to time the market. Let's say you have a lump sum of $100,000, whether or not it's good to just throw that $100,000 from the very start into the investment or DCA that money in over the course of a year. But I'm talking about now for the next 40 years, right? This is not you have a nest egg and trying to figure out how to invest the nest egg. This is you're just starting, you're coming out of college. You got your first job, you got your first paychecks. What do? So I wish I had done this earlier in a very consistent format of allocating a certain amount of money every day. So I'm going to go through some numbers with you guys, all right? $10 a day. $10. And here in California, it's like 2 coffees or a sandwich, right? Out on some restaurant, not even a nice one, certainly just some sort of fast food sandwich. $10. I think everybody can spare $10 a day, assuming you have some sort of income at all, because really that comes down to handling your expenses, right? Okay. $10 a day. What does that do, Gino? Well, the S&P 500's return rate of 10% over 40 years. So you get out of college and you're 21 and you want to retire when you're 61. You got a long run right here. By the time you're 61 at 10%, $10 a day turns into, let's see here, $1.6 million. $10 a day, $1.6 million. That's not bad. The vast majority of that return, of course, is from the growth of the investment, which is the point. It's not the principal that you allocated to it. Say you did a little bit better, say you got 15% on your money for those 40 years. A little harder to do, certainly, but not impossible. Well, you'd have $6.5 million. 6.5 by the time you're 61, right? And if you want better returns, you can get involved in different things. You can start your own business. But the point here being, and the value in the original concept being, dollar cost averaging is a super powerful tool for you to use. But I'd argue, I don't care how sophisticated of an investor you are. If you're an employee, if you're a day trader, if you're an investment banker, if you're an artist, you should always have some sort of a dollar cost averaging routine within your investments for the rest of your life. For the rest of your life. Everything else can be supplemental, can be added to it. But the foundational basis should be every day, $10 is going to something. Every day, $10 is going to something. Or $5, or even $1, just something. Every day, something is going towards investments, things that will actually be more fruitful for you over the coming decade or 2 or 3 or 4, right? Investing every day, a small amount that's meaningful in the end. I recently started doing this with Bitcoin myself, and I wish I would have started sooner. I was more used to lump sum investing. This month, I've got an extra $500 left over. Let's throw that into the market. Or I just got this Christmas bonus. I'm going to invest the whole thing. Whatever it might have been, it was certainly less frequent and consistent. I'm not saying don't do that when you get windfalls of money or you end up with more savings than you would have accounted for originally. What I'm saying is make sure you're putting DCA as the foundational bedrock of your investment. A little bit every day moving you forward. The tiniest step up in a ladder to success, but you're stepping every day or every week or every paycheck or whatever the point here being. Okay, guys? You can do it. I think it's really smart. It's helped me a ton. I'm sure it's going to help you. Give it a try. I don't think you're going to regret it. And over the long run, I think everything you do financially is going to be more fruitful for partaking in it. Okay. Geno out.